Kaspa in the last 90 days has had a negative ROI of 31%, but still it remains in this golden breakout zone for the cryptos outside of top 20 cryptos by market cap. The status of the overall cryptos in this galaxy is in accumulation territory with an average gravity of 1.4 out of 100. That means through the lens of their historical time weighted average price based momentum, what we can see that the price has declined significantly from this purple line over here for Kaspa, which is the time weighted average price. That's the price value or the value of a particular asset um, generated through years of trading. Again, how this is calculated, each day is considered the equal weightage, and an average price of that day informs this time weighted average price model. And using the lens of gravity is identifying its previous historical deviation from the time weighted average price. These risk levels are calculated. Whenever the asset is in risk level one, it's from the perspective of time weighted average price, and even just from just looking at the chart, you can see that these are the places where the price is relatively speaking undervalued. uh, right now, the price is about 61% lower than the time weighted average price. That's the discount with respect to the time weighted average price. And this is the highest deviation that Kaspa has seen uh, for a prolonged period of time. That's why the gravity risk has been rounded up to zero. The risks are never zero. Just this is how the model rounds it off. Looking at the base model, not the gravity model, you can see again the this model is slightly more forgiving with respect to the bottoms. Yet even this base model is classifying the risk level at one. The time weighted average price for past 5 years check with respect to the historical deviations as well. And then the gravity model, the time weighted average price is around 6.5 cent. Price is 2.5 cents. So there is about that 61% deviation. Coming to the DCA model, which is the regression based model. Right now, this is again as I wouldn't imagine the slope of the regression function to be always this downward sloping trajectory. This has happened since the price started falling set of lower highs and lower lows since October 2024. Now, if this prolonged presence over here, where the price is rallying beyond the dotted red line, just because the slope of the regression function has been more aggressive off late. If there is a breakout, that could also mean that the slope of the regression function could start having like a sine wave kind of a slope rather than just downward only. Right now, the fair value of cost price at around 1.1 cents per this model. That could be a in the long term if there is this towards the end of 2026, if there is one more downturn, then that area could be worth looking at. Nonetheless, again, not much insights from this model, just highlighting the higher, possibility if there is a breakdown, there is more room to go down for Casper. But if there is the breakout from over here, the slope of the regression function stands to change the most. Nonetheless, this means that the price has come really close to a decision time that's it cannot go forever, where the price action goes sideways for a prolonged amount of time and not affect the regression function. So that's a good spot to be in terms of the cycle regression related metric. It's still again the same regression function, still identifying a few key things with respect to Caspa. Is that and I know the regression function is not that promising I mean, in terms of bullish expectations. Nonetheless, what we have seen is that the price has now come close to that two standard deviation ceiling, and then the highest regression ceiling, the three standard deviation, is at around 3.78 cents, which is roughly speaking from here. Again, another 11 cents more, and in terms of percentage, it's close to 40% higher from here. If that happens, and if there is this breakout from here, the slope of the regression function slowly needs to account that kind of a rally. In terms of the machine learning based price forecast, most scenarios right now are again escaping. Even the base case and the bull case both are escaping the regression function. That means the likelihood of price action going up is about 2 out of 3 scenarios are saying price action goes up. Even the bear case scenario barely touches the regression upper bound of the regression. So the 10th week bear case for uh, task price at around 13 cents using this machine learning model, that is ARMA based machine learning model and regression based encapsulation. And the bull case is at around 5.2 cents, which is roughly speaking about 50% higher than the current price. The base case is at around 0. I mean 3 cents, 30, it is 13 cents, and then 52 cents. And then my apologies. This is 1.3 cents and then 2.9 cents and then 5.2 cents. So where can Kaspa go from here again if we go to our classical view? This is the main galaxy, the top 20 grippers. They are exhibiting also accumulation territory. So is um, this outer galaxy. Kaspa sits in this golden breakout zone, which is comprising of grippers that have had greater than median momentum and less than median risk. Uh, with respect to the uh, performance of these assets, you can see over the last 24 hours, most of them are up. Uh, INJ being more rallying more over the last 7 days, last bar at 8.5%. Over the last 30 days, it's a galaxy of red with just ruin as an exception. And over the last 90 days, every single major crypto has gone down. So the narratives in the asset class as of whole are more bullish than bearish at this point over the last 7 days based on the social media activity with respect to cryptocurrencies. But the overall social risk meter is just 28 at this point. It means not much social media interest related to cryptos. The risk levels for, especially for Kaspa as they stand right now, are lower than overall risk level is lower than 33. That's why, again, most of these assets are in this accumulation territory. You would see Kaspa at around 21 out of 100. So the portfolio weightage with respect to the market cap, it's satellite at this, so Casper at this point is in this satellite mode where uh, allocation of 7.2% is then prescribed by this portfolio model. If we become risk covers, more risk covers, Casper goes away. More risky, Casper's allocation is at 5%. With respect to the good thing for Caspa for this galaxy is that Caspa has had from annual percent based since 2021 has had, I mean, like Caspa was launched much later, but has had the most decent compound annual growth rate since that point. Annual return at around 65%. Annual volatility is slightly high, but at least amongst its peers, it stands head and shoulders above the rest in this zone with 65% uh, annual return, annual volatility less than injective and render. So it's in this high octane growth zone, which is comprises of crypto which have had a positive return and then also positive volatility year over year. And now from launch, these assets might be down, but then since that area, they are still coming up. So, for example, over here, INJ, you look at the machine learning chart, you can see since launch in 2022, the price has still maintained a decent uptrend, accounting for these sets of lower high and lower lows. So, where can Caspar go from here? But the indicators over here, the bear market work on the indicator for Caspar. Um, right now, the composite risk is 50%. Um, the bear case scenario is at 1.2 cents. The worst case scenario is 1.09 cents. That means it's a close drawdown of somewhere between 50 to 58% from here. That's what is expected per these models. Um, if we look at the other side of the things, let's say if Jasper recovers well after the bear market is over, the base peak is at around 9.7 cents. Bull peak estimated for the next bull run is 13 cents, which is roughly speaking somewhere between 4x and 5x of the current price. With that, hope you enjoyed the content. If you did, please leave a like and subscribe and hope to see you again tomorrow. Thank you and have a nice day.